very warm welcome to you. Thank you for joining us on Business Morning. I'm Chimezie Obi Iwago. Well, President Muhammadu Buhari yesterday was announced the winner of the 2019 presidential election, giving him another opportunity to be Nigeria's #1 man for another 4 years. However, analysts say the president has a daunting to-do list in these 4 years, from reviving an economy still struggling to recover from a 2016 recession to tackling insecurity, particularly in the northeast part of the country. President Buhari, while receiving the certificate of return from the Electoral Commission yesterday, promises to run an all-inclusive government. Well, for now, Nigerians are full of expectations from the re-elected president. In the meantime, let's take a quick look at some business headlines this Thursday. The consolidated debt of 32 states of the Federation as of December 2017 has exceeded their gross statutory revenues. This is according to a new report by the Fiscal Responsibility Commission. The report shows that as at the period under review, the 36 states of the Federation had total public debts of over 4 billion naira, while the gross statutory revenues was over 2 billion naira, and net revenues stood at over 1 billion naira. This, according to the report, shows that the debts of the 36 state governments exceeded their statutory revenues for the whole year by about 2.4 billion naira. It also means that the states spent a total of 359, or about 17.12% of their statutory revenues to service their debts within the 1-year period. The report states that all the states of the Federation except Anambra, Katsina, Sokoto, and Yobe had debts to statutory revenues exceeding 100%. The report also shows that all of the states of the Federation, Osun State had the highest debt burden, going by its debt to gross revenue ratio. And Nigeria's gross revenue dropped by 42.21 billion naira from 547.46 billion naira recorded in December last year to 505.24 billion naira in January. Speaking at the end of the Federation Account Allocation Committee meeting, the Accountant General of the Federation, Alhaji Ahmed Idris, said that despite the revenue decline, the committee was able to allocate the sum of 610.36 billion naira to the 3 tiers of government. According to him, additional approval of 50 billion naira to be withdrawn from the foreign exchange equalization account for distribution was being awaited by the committee, and this would bring the total amount to be received during the period to 660.36 billion naira. The federal government, after deducting the 75 billion naira cost of revenue collection to the revenue-generating agencies, received 252.41 billion naira. The 36 states were to share the sum of 170.54 billion naira, while the 774 local government councils were to receive 127.92 billion naira. The oil-producing states were to receive 41.99 billion naira based on the 13% derivation principle. And to the markets now, the equity market on Wednesday extended Tuesday's negative sentiment to record 0.71% loss. The decline was impacted majorly by losses in the oil and gas and banking sectors. Well, Temple Ashaju will talk more about the numbers and perhaps what is in the mind of investors at this time. Good morning, Temple. So what sound bite are you getting from the market this morning? Are the traders attributing that negative sentiment at the equities market yesterday to the outcome of the election?
A lot of investors are just looking at reacting to that now. Don't forget the announcement was made in the midnight, and a lot of investors didn't have to immediately they couldn't take position instantly on that. So it's the initial mandates that they had given to their brokers, their traders, that was implemented yesterday here on the floor of the Nigerian Stock Exchange, and for those that even traded remotely. So we will have to wait to see how the market will react to that announcement, today. But if you look at the other side of the market, the debt market, you recall that was really bullish. The bond side of the market saw bullish sentiment. Treasury bills was really also bullish in terms of the secondary market, and of course the primary market auction that the Central Bank of Nigeria actually carried out yesterday. We saw a huge oversubscription, over 600% subscription, and that's yesterday. With equities markets, so yesterday we were down some 0.71%. All share index remained at the 32,000 psychological line, 244.24 levels, and we saw equity capitalization as still at 12.14 trillion naira. Activity level yesterday shows a whole lot of sell side in terms of how investors, traded off yesterday, because again we saw so much of losses on the tier one banking names and of course major consumer goods stocks in the market. And if you look at the market breadth, which measures the sentiment of investors in the market, was really negative. We had just 10 gainers as opposed to 30 losers in the market, and that the gainers list was led by name it pharmaceuticals, which is in the subsector, the pharmaceutical subsector of the market, and of course Union Dicon, which lost some 9.68%, led 29 other stocks to the losing end of the market. So on the top trade segment of the market, we had Diamond Bank, which lost 2% in its share price, and of course 187 million units of its shares were traded off for a value of 466 million naira. But if you then look at the overall activity level, we had volume at 456.07 million units of shares, and that represents an increase of 42% over what was traded on Tuesday. If you look at the value of this transaction, which was put at 2.67 billion naira, that's an increase of 10% when you compare to the preceding trading session. If you take a look at the deals, it was really high, heavy, 5,416 units of 516 trades basically yesterday. And month to date, we moderated to 5.52%. Year to date, we also moderated to 2.59%. This now takes us to the sectors. If you take a look at the sectors, the oil and gas segment of the market was the worst hit, down to 101.65%, followed by the banking names. But generally, it was only the insurance segment of the market that recorded a bit of gains, and thanks to Cornerstone Insurance, which had some 4.55% in that regard. But the banking name, we saw Wema Bank shedding some 8.24%. Access Bank declined some 4% in spite of its mergers and acquisition with Diamond Bank. Zenith Bank had some 3.4%. FBN Holdings was also down some 2.50%. UBA was down 2.5%, and of course Guarantee Trust Bank lost some marginal appreciation that it would have had, 0.52% down yesterday. Industrial goods segment of the market, investors are yet to react to Dangote Cement. Dangote Cement's earning came in yesterday and was really, really impressive, with some final dividend of 16 naira. That is something that a lot of investors really want to react to. Possibly we'll see that reaction coming in today. But given the losses that we saw on WAPCO by some 0.38% yesterday, that sector was hit by some 0.05% loss yesterday. Consumer goods segment of the market, a lot of investors sold off on Unilever, which is down 4.65%. Dangote Sugar was down 2%. Because GlaxoSmithKline down some 1.27%, and of course Dangote Flour also shed 0.83%, with Honeywell Flour down 0.72%. All of these contributed to the 0.6% loss that we had in that sector, in spite of the fact that PZ had some good gains yesterday. That was not able to outperform the losses that we had from all of these mid-tier names in the consumer goods segment of the market. And of course, if we move further to the oil and gas segment of the market, that sector was down 165 basis points yesterday, led by O&O, which shed some 9.66%. And of course, we saw some 3.7 million units of the shares exchanged here for that price of 6 naira 55 kobo. You might want to interpret that as a kind of profit taking on that particular counter there. For all the names, corn oil was really static. Forte oil was down, was static rather. 11 PLC remained at 180 naira. Seplat, of course, is 619 naira. Seplat, as of yesterday, early trading hours, made a statement available to the market, announcing its forthcoming analyst call. That is something that a lot of investors will really want to also participate in. A lot of analysts will be gearing up to participate in that particular one to see how it will shape the earnings of that particular company. Of course, the earnings may come in before saw Total remaining at 190 naira. We saw just 4,325 units of the shares done there. SMR PLC was down 7.37% at 4 naira 40 kobo. Just a million units of the shares done there. The unlisted securities market was up 0.24%, and of course, the debt market was really bullish. We saw that because of the election results that came in, we saw yields on the 2027s and of course 2034 kind of breaking the 14% support level, so 13.91% for the 2027 securities, and of course 13.81% for the 2034 security. In the treasury bills market, there was a primary market auction yesterday, and it was really oversubscribed. 115.12 billion naira worth of transactions there yesterday, and of course that was fully allotted by the Central Bank of Nigeria yesterday, as we saw that stop rates moderated by some 35 basis points. But at the secondary market of the market, we saw that the buy sentiment was across the short, the mid, and of course the long end of the curve. At the end of the day, we saw the yields moderating at 50 basis points, coming in at 13.45%.
Oh, well, Temple, I guess you just have to hang in there. And just as you said, the market is still digesting the outcome of the election. So hopefully when we come back to you, you'll tell us what the outlook looks like. Thank you, Temple. Well, still looking at the markets, but this time the commodities market, the think tank at Financial Derivatives believe that relatively hitch-free election is positive for investor confidence. According to them, President Buhari's victory signals policy stability. The naira traded flat against the dollar at 360 naira in the parallel market in spite of election risk, while it appreciated slightly by 0.09% to 361 naira in the INA FX window. Interestingly, we saw a surge in the total volume of trades in the INA window yesterday. Volume went up by 380% to $354.88 million in yesterday's session. However, the downside is that the external reserve has maintained a downward trend, currently down to about $42.33 billion on grid power output, remains below 4,000 megawatts per hour. Well, Adim Okwesa, a member of the think tank group at Financial Derivatives Company, is here with me to take us through some of those data there. Good morning, Adim.
Good morning, Chimeze. Thank you.
Well, let's begin with those goodies you have there. According to your team, relatively hitch-free election, positive for investors' confidence, President Buhari's victory signaling policy stability. What informed this view?
Yes, definitely. This is certainly a good thing for the country. The fact there was no hiccups, there were no hiccups. This elections went relatively smoothly. For example, I think the fact that Nigeria is viewed as one of the bellwethers for democracy in Nigeria, and as a result, these elections were keenly anticipated by the international community. So the fact that these elections went smoothly, and also more importantly, local and foreign observers both expressed that these elections were conducted with no fundamental problems. So all that will do is just strengthen the credibility and legitimacy of the election. So that is certainly a positive thing for the country. And also the fact that President Buhari has been able to secure a second term, it signals policy stability. I mean, if there was a newly elected administration, the first concern will be, will there be any drastic change in policy? That uncertainty will also be magnified if, for example, the administration takes several months to appoint a cabinet. So with President Buhari securing a second term, all that has been avoided. So that is certainly a good thing. I think we already know what the president what his agenda is. We already know he wants to bridge the infrastructure deficit. He wants to plug leakages. He wants to increase non-oil revenue. We expect that to be continued. But the million-dollar question is, how different will this administration be different? I believe that it will be more aggressive in promoting efforts to reduce the country's dependence on oil. I believe that it will be more aggressive in trying to increase Nigeria's tax revenue. We're already seeing that with the initiatives that they have announced. We expect that to continue, and also making the business environment more friendly for investors. I believe that will continue, and all that is positive for the economy.
Now, in all of this, of course, the president's re-election, talking about the consumer itself, what is the outlook for the consumer market? The month is ending today.
Yeah.
So looking forward, looking into March, the month of March, what does the outlook look like?
Well, for consumer prices, we expect prices have remained relatively flat for most of the month. We expect that to continue. The harvest was extremely good, one of the best harvests I've seen in a couple of years. So that has increased food supply, and as a result, already seeing some commodity prices decline. So we expect that to continue in the month of March, and that would also feed into inflation. So maybe we saw inflation increase slightly in previous month, so maybe we would see inflation decline, hopefully decline, because food inflation should decline in coming months.
Okay. Now, one of the downer you have there on your slide is that on-grid power output remains below 4,000 megawatts per hour. Now, what would your team expect to see this new administration of President Buhari do in the next 4 years in terms of power generation?
Well, power is a very complicated, extremely complicated issue, I should say. There have been several administrations that have struggled with this crisis. But, I mean, what can be done? I think it all amounts to trying to increase investment in the sector if you can initiate cost-reflective tariffs so that money can come into the sector.
When you talk about cost-reflective tariff, can you expatiate on that?
Or just putting a price mechanism that can attract investment in the sector so that investors would come in and know that they have a guaranteed return on investment. Because that's what we need right now. We need money to go into the sector to fund. There's so many infrastructure constraints. We see the amount of money that is lost every day, over 2 billion naira a day. I mean, that's a lot of money. So if, because of grid constraints, gas constraints, because there's not enough infrastructure to distribute enough power, to transmit power. So if we can get in money into that sector, we can get in enough resources, I mean, that would do a lot. And we can already see the correlation between power and GDP. If we can just improve power by a slight amount, the transformative impact we have on the economy will be out of this world. So it's extremely important that I hope in this administration, I mean, this is the time for the administration to initiate the unpopular reforms because the president has nothing to lose. He's not running again. So this is the time to chase those.
Yeah, but having studied or read the body language of this administration in the past 4 years, do you think they have the willpower to actually deliver when it comes to power in the next 4 years?
Well, I think that is the thing, because there's so much vested interest. People want so many different things. But I know if you initiate unpopular reforms, yes, it will induce short-term pain, but there will be long-term benefits, which would definitely outweigh the short-term pain. So this is now to deliver those unpopular reforms, unpopular but meaningful and impactful reforms that would potentially transform the economy. So I hope there is political capital and political will to implement those reforms.
Okay, just before I let you go, Adim, you talked about purple. That's the commodity in focus for today. Why do we have to talk about purple? Why purple? Why is it worth talking about?
Because purple is one of those fruits that is low capital but very high returns on investment. I mean, you can start a purple farm with less than 100,000 naira. You can start a sizable purple farm with less than 100,000 naira. It is very highly nutritious. It has various minerals and vitamins, and it is in high demand, both domestic and industrial uses.
No, but we know that it's a perishable item. So what potential is there in terms of regards to export?
That is one of the drawbacks, because it's extremely perishable. So if you don't have buyers before the fruit ripens, that is a problem. That is why it's extremely, one of probably the disadvantages and one of the drawbacks why farmers are discouraged, because of the inadequacy of storage facilities, because that extends to other commodities too. That's a problem with Nigeria's agriculture. So that's why it's extremely important to secure your buyers, secure those companies that would take your fruits before the fruits ripens.
All right. Adim, thank you for your time. Adimokwesar is one of the research analysts with Financial Derivatives Company. We'll take a break now, and when we come back, we'll look at some of the economic agenda Nigerians are setting for Buhari's new administration. Just stay with us.